the club again because they sustain a career-threatening injury or they misbehave or something, I don't know. The player registrations for certain players were sold after the year end for 25 million. The net book value was 7. MC would like to know how to deal with the acquisition, how to deal with the extension, how to deal with the review, and how to deal with the sale of players' registrations. We're a football club. We're a basketball club. And we are paying money to buy a player's registration so that they will play for us for 2, 3, 4, 5 seasons. Does that represent an instant expense? Because we pay money out, so we credit cash. Does that represent an expense or an asset? An asset. Initially, it will be recognized as an asset. And it has to be a non-current asset because we're going to benefit from the player's registration for 2 or 3 or 4 or 5 years. What type of asset are we talking about? Is the player's registration a tangible asset or an intangible asset? It's an intangible asset, isn't it? Yeah? Because we've got something which is identifiable. It's even contractual. What makes it identifiable is it's contractual. We're going to get the future economic benefit. We can control that contract. We can sell that contract on. So the first thing we're going to do is we're going to look at the information and we're going to start step by step. But fundamentally, the area that we're looking at here would appear to be intangible assets. The purchase of a player's registration represents an intangible asset, IAS 38. Now, the definition of an intangible asset is that it is an identifiable, non-monetary asset without a physical presence. These contracts are contracts. That's what makes them identifiable. They're also separable. Yeah? So the registrations are identifiable as they are contractual and they can be sold. There is an asset because there is future economic benefit. In other words, they can be sold. Maybe I should slow down a little bit. Strictly speaking, an intangible asset has to be identifiable. Now, identifiable means either it's separable or contractual. And these registrations, I think, are both. They are both separable, you can sell the player's registration on, and they are contractual, there is a contract that you have bought. It is an asset because there is a future economic benefit, you are able to sell on the player. Right. I need to keep very, very close to the question. We buy and sell players' registrations. We must purchase the registrations for the player to play for the club. The players' registrations are contractual. The cost of acquiring the player, transfer fees, league level fees, players' agents' fees are incurred by the club. Often the players' former clubs are paid amounts which are contingent on the performance of the player. So when we are buying a player, there may be further amounts paid which are contingent upon the performance of the player. For example, if they score a lot of points, then a further 5 million may be payable. So you're negotiating to buy a player. You're negotiating to buy a player. And in that negotiation, the contract says you will have to pay 5 million more if that player continues to do well, does whatever. How would you describe that? Well, it's contingent. It's contingent consideration. Would you recognise that as part of the consideration? How would you deal with that? Difficult, because we just got a number of 5 million, which implies it's a bit black and white. I think what you've got here is contingent consideration. Move it into the context of group accounts. Move it into the context of buying a sub. If I say to you that if we meet the profit target next year, if we meet the profit target in 2 years' time, I will pay an extra 5 million. That 5 million is a contingent consideration. On what basis would you record that contingent consideration? How would you record it? Well, I don't know whether the profit target is reasonable or not. If the profit target is eminently achievable, then I think I would record the 5 million. If the profit target was really stupid, then there would be no likelihood of me paying the 5 million. If you're recording the investment, this has to be recorded at the fair value of the consideration. So the contingent consideration is a judgment, and you would recognise at the fair value. So if we were 99% certain that the 5 million was going to have to be paid, you would in the first place debit the player registration 5 million, credit the liability 5 million. Yeah? If that was the case. Players' contracts can be extended. Players' contracts can be extended. Don't know how much the figure is, it doesn't matter. But that incurs additional costs. If you're going to extend a player's contract and incur additional costs, how would you deal with that? If you own a building and you extend the building by putting another floor on the top, yeah? If you own a lease and you pay a sum of money, a premium, to extend the lease for a further 10 years, if what we're doing is we're extending the contract, which makes the life of the asset bigger, if you're extending the hello, are you there? What are you going to do with this cost? Capitalise it or expense it? Capitalise it. You've improved the asset. You've now got a longer lasting asset. Forget the fact that it's a footballer. You know, you're just dealing with this intangible asset. You've extended the life of the asset. Extension to contract. Yeah, we have extended the life. We've extended the life. So therefore you capitalise. Therefore you capitalise. Which reminds me that the intangible assets presumably will have a finite life, and therefore they must be amortized over their useful life. They must be amortized over the contract period. If you've paid 3 million for a player's registration for 3 years, then you would charge 1 million a year. I mean, it's that simple. At the end of every season, which is the end of the financial year, the club reviews its playing staff and makes decisions about whether they wish to sell any players. These registrations are actively marketed to other clubs with their selling price. Players' registrations are also sold during the season with performance conditions attached. What happens if you are actively marketing by circulating other clubs with the estimated selling price? What does that mean to you? Held for sale. Absolutely fantastic. So when we are looking at the active marketing, the asset would appear to be held for sale, because there would appear to be a commitment, there would appear to be an active plan to sell the asset, it would appear to be in a suitable condition for an immediate sale. We're offering it at a reasonable price, so therefore it becomes highly probable that the sale will take place within less than 12 months. So when you are actively marketing, the player registration gets reclassified as held for sale, because assuming that all of the conditions are met. There's a commitment to sell the asset, an active plan to sell the asset's in a suitable condition for immediate sale, you're offering it for sale at a reasonable price, and the sale is highly probable that will go through within 12 months. In which case you cease amortization, you write down to the lower of the fair value less cost to sell, if that is appropriate, and you present as a current asset. Held for sale. As a buzzword. As a marker, you've got to look and find held for sale. As soon as I see the word held for sale, tick, there's a mark. Almost doesn't matter what the sentence is. Yeah? Because you've picked up from the question that actively marketing the player's registration is held for sale. Then there's a second mark available for just saying something about held for sale. But don't write absolutely everything. There's a lot going on here. Occasionally it becomes clear that a player will not play for the club again because they have an injury. They have a career-threatening injury, or they are permanently removed from the playing squad because they're always drunk. Yeah, because they don't turn up for training, because I don't know. I'm looking for an accounting standard where we have a player who becomes permanently injured. What would you... Impairment. Yeah, impairment. That's the buzzword that we're looking for there. That's the connection. So we've got an injury to a player, and therefore this becomes, the player becomes subject to an impairment review, where we look to write it down to the recoverable amount. yeah, where the recoverable amount is the higher of the fair value less cost to sell and the value in use. But realistically, both will be nil. Because if the player can't play again, no one's going to buy it. And if the player can't play again, there is no value from that player. Recoverable amount likely to be nil. Charge to P&L. So when you have an asset that's not previously been impaired, you would look. All you need to realise is held for sale, impairment. Then you've got 2 or 3 marks that you can apply straight away. Yeah? It is not a question of writing everything that you know about impairment, because it's just 2 or 3 marks. It's not a question of writing everything you know about held for sale, because it's just 2 or 3 marks. You've got to apply it to the context. If the player is never ever going to play again, basically you're writing the player off. Yeah? The recoverable amount is likely to be nil. Asset is never being revalued, so charge the impairment loss to P&L.